Micron. So looking at Micron, Micron is a manufacturer of memory and storage things. Looking at its financial performance, the net income margin has deteriorated significantly. However, it saw a massive rebound in 2021, above the industry average of 18% on average. The net income margin is what, 32%, and the industry average is 18%. So that's good. But the margin deterioration, um, which there was mainly due to COVID. But you must remember that even though there was a massive deterioration, there was also a massive rebound as well. However, competition in this sector of the industry is also very fierce. So heavy competition is also weighing down a bit on margins. Thus, even though margins have rebounded, we need to give a closer look at other measures. This year effective Micron has been in not only confronting competition and reducing the effects of COVID. Now, the effects of COVID, how much it reduced it as logically possible. COVID has really ran a riot over operations, but you have to see how productive effect. So, however, in the face of tough competition and COVID, cost control has been very, 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 very tight. Been very, very good actually. Reining in costs to protect margins as well as basically reduce prices to kind of claw away some market share. So cost control has been good. When you look at the fact that the performance of the cost of revenue is slightly above the industry average of just 9%, at 12%, is slightly above the industry average. However, so slightly below, so slightly above it, huh? This is a good indication of trying to reduce costs, just reduce the effects of COVID, as well as to improve the competitive position of Micron. R&D, however, is below the industry average. So Micron has increased R&D at a rate below the industry average. I mean, this just highlights the fact that Micron has been almost obsessed to a large degree in just getting costs under control. So it's shown decent cost control, not only in protecting margins, but also to ensure that the costs that were incurred do result in a return. And when we look at our top and bottom line, we can see that, yeah, the costs have resulted in a return, as we're looking at how much we've increased revenue, looking at how much we've increased net income as well. So yeah, costs have been justified in providing a return. Spending on R&D, however, in my view, seems to be a bit insufficient. I mean, at industry average is about what, 20%, and Micron is only investing 11% of revenue in R&D. Worries me a bit. It, it appears to be insignificant from my point of view. Um, it does not. It appears to be a bit insignificant. ROE below industry average of about 26%. However, not gonna cry too much about it because the ROE figures, especially if there's a decline, but that can be explained by COVID, massive rebound, response to COVID. The rebounds mainly due to response to COVID, getting costs under control, being effective in using operations to provide a return in the form of sales and growing the bottom line, stable margins. So it's good. It shows me that Micron does achieve a return on capital investment. I can live with that. Below industry average, but I can live with that. I can more than live with that. The financial position. So the current ratio See the industry average. Industry average is about 2.37. And Micron's average is what? 2.8. And on top of that, the current ratio has been improving. So again, this highlights the very, very strong liquid position Micron is in. Asset test ratio supports the current ratio. So with the asset test ratio, we can see that Micron's liquid assets have been improving. You can see that improvement there, as well as it's at a level that's above industry average, just over 2. Just over 2 is above the industry average of about 1.88. So both ratios are very impressive. They highlight a company in Micron that's in a very strong liquid position. The balance sheet is very liquid and has virtually zero to little liquidity risk. Very, very good. The inventory days, however, on average, they are above the industry average. Industry average is just over 101 days. Micron's inventory days are 124 days on average. However, what can be improving or what can be satisfying is that there's been an improvement. That improvement is satisfying. I think. Um, so Micron has been improving its asset management. So I like that. So even though on average it's above uh, the industry average. Not the end of the world. Since the inventory days have been significantly improving, there's been a dramatic improvement in liquidity. So the balance sheet overall has really, really, really been improving and is really, really, really in a strong, strong, strong liquidity position. Debt equity paints a picture of a company that, well, doesn't have sufficient, well, doesn't have significant financial risk. The industry average is about 126. Micron's average is about 35%. So very good. Look from a balance sheet point of view, solid, solid liquidity, improving inventory days. So no little liquidity risk. Virtually very, very no very no financial risk. So company still has a lot of room available to add debt should it need to improve. So it's a very liquid, very low risk balance sheet that Micron has. Very impressive. Cash margin, well, it's deteriorated, but in 2021 you can see there's been a massive bump. Um, Deterioration of core, the deterioration, not what is it? It's not worrying. I think that there was a massive rebound. I can live with that. There's been a massive rebound. Margins are, of course, above industry average. Industry average is about 32%. Micron average what 47%. So very, very good. Um, so Micron itself has outperformed the industry. The operations are healthy enough to convert revenue into cash. That's what this ratio tells me. It has a business model that can generate cash basically. So a very, very good performance from Micron. It has really, 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 really high um what is it, cash margin. I like that. The sufficiency of cash flow slightly below the industry average. Industry average is about 0.84, but has shown decent improvement after a slight deterioration in 2020. Very, very strong improvement in 2021. Again, this can be supported by the strong um, performance by the cash margin. One can live with that. So the sufficient cash flow is mainly burdened by investing activities. A lot of Macron's cash resources go towards investing. So, they are investing, they are improving their operations, they are adding to their capacity. That is very good considering the kind of heavily competitive market is. So Micron does not want to lose market share, it's using a lot of its cash to invest in its operations. I can live with that considering how strong the company has been performing, considering the strong balance sheet it has considering the fantastic top and bottom line performances, the good cost control, good cost discipline. Yeah, I can live with that. So, you know, Micron is a very, 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 very good company. The buyback very low, due most of the fact of the mainly due to the fact that the entity's cash is mainly tied up in investment activities. So it doesn't pay that much, but it's using available cash, just to improve its market share, grow its market share, protect its market share, to add, long-term shareholder value. So I can live with that. I like the cash performance of Micron. It's very good, very, very, very good. Yeah. So overall, I think yeah, Micron is a very good entity overall. I mean, there aren't a lot of bad things wrong with it. It's really a good company. Really, really good company. I'm impressed with Micron. Well done, Micron.